Boom, we are live. Thank you so much, everybody, for joining today. Very exciting. We have our resident guru, Mr. Shawn, our trader guy, in the house, helping us out. We had an awesome event yesterday. I mean, the signals were all there. I know a lot of us weren't on the charts, but things have been playing out really nicely. Our community has been very profitable. So much exciting stuff happening. Look at that, 17 members. Thank you, guys. Verena, welcome. Christian, Marianne, let us know how it's going. Crypto Noob, ND, Warren, look at this. McCall, some Russian name I wish I could pronounce. Christian, welcome to the chat, buddy. If you have a joke for us, I'm going to unmute your mic for you. All right, so no further ado, let's give a warm welcome to Shawn, our trader guy. He's going to give us some beautiful insights into the Fibonacci golden pocket technique, as well as some general TA on Bitcoin. And look at this, members flowing in. Jess, welcome. Gandalf, welcome. Let's keep inviting our friends. Warren, so nice to have you, buddy. All right, Shawn, over to you. Thank you so much for joining us. I'm so excited to see this.
Sweet. So I thought that I could talk on Fibonacci and Fibonacci golden pockets. Why? Because I'm seeing so much over the last couple of days and weeks that Fibs are being respected, especially on Bitcoin, especially on the altcoins, like something crazy. And I thought I'd go and do a refresher for myself on Fibonacci, on golden pockets, and yeah, I've prepared a couple of notes for us as well. So let me just see. Okay, for some reason you're not able to see that Word document of mine. Just give me a second. I want to, I should actually share screen one, not just a specific screen. There we go. Right. Everybody can see that?
Perfect.
So, okay. So I thought we'll start out. You know, there's a lot that you can say about Fibonacci. You know, it really is it's a huge topic. So I'm going to make this document available for you guys, so you can just kind of use it as a cheat sheet. I'll also, once Jordan makes the recording available, I'd love to put it onto my YouTube channel, and I'll put the link to the document into the description. I'll actually make it into a PDF. But yeah, if we head over to Investopedia, and my and my Mozilla's hung. Just give me a sec, guys. Apologies. I'm going to actually close this and just restart it. I don't know why it does this. It does this from time to time for some reason. Okay, and let's reopen. I don't know why it does this. It's up to date. Nothing wrong with the PC, but it seems to do this from time to time. Maybe I've got just too many screens open. So let's just give it a sec to load. Okay, so Investopedia. I think I've shared this on one of the previous streams, but Fibonacci and the golden ratio. So I'm just going to read quickly. There's a unique ratio that can be used to describe the proportions of everything from nature's smallest building blocks, such as atoms, to the most advanced patterns in the universe, like the unimaginably large celestial bodies. Nature relies on this innate proportion to maintain balance, but the financial markets also seem to conform to this golden ratio, and it's incredible. I'm going to show you some things that I've discovered on doing my little refresher on Fibonacci that is incredible. You can actually see when the possible bottom is in. You can see when there's a trend reversal. You can see certain things, and we'll hopefully get into that. The golden ratio is derived from the Fibonacci numbers, a series of numbers where each entry is the sum of the two preceding entries. Okay, I'm not going to get into the technicals, but it's basically 1 + 1 is 2, 1 + 2 is 3, 2 + 3 is 5, and so on. You can go and do the research on it. Although the sequence is associated with Leonardo of Pisa, the Fibonacci numbers were actually formulated for the first time by the Indian mathematician Priyanka 600 years prior to their introduction to the Western world. So the key takeaways: the golden ratio is an irrational number that is equal to that number. I'm not going to try read that. I'm not a mathematician. Or approximately 1.0 0.618. The ratio is derived from an ancient Indian mathematical formula, which Western society named for Leonardo Fibonacci, who introduced the concept to Europe. Nature uses this ratio to maintain balance, and the financial markets seem to as well. The Fibonacci sequence can be applied to finance by using four main techniques: retracements, arcs, fans, and time zones. So in this session, I'm going to deal with retracements. Okay. So you can go through the history and the mathematics. It gives you the numbers and so on. And it's really very interesting that this Fibonacci ratio occurs in nature over and over. The spiral in a sunflower, there's a Fibonacci circle ratio there, 1.618. The ratio in beehives, males to females, golden ratio, 1.618. It just occurs over and over. As far as I know, there's a ratio of the length of your forearm versus the length of, I think it's the length of your entire body. That's a Fibonacci golden ratio as well. So let's get into the notes, and we'll go through each of these things as we go on. I hope this is big enough. Jordan, is that okay for you guys to read? Must I make it bigger?
Maybe a little bit bigger if you can.
Okay, sweet.
Just for the mobile users.
Yeah, no worries. How's that?
Perfect.
Good. Okay, so let's start at point 1. Fibonacci retracement is a leading indicator that can predict future price levels that might be reached, and also where reversals could be. And I saw in the chat, Gibson asked, how do you get Fibonacci lines? I'm going to show you what I do, what the standard is, and how I change it, because the standard, I think, it's a little bit dirty on the chart. It can get very, very confusing. So it really can show you where there's possible reversals, possible where price is going to go to. You can even use it for TP. So very, very important. Look for levels of confluence on your horizontal levels and other technical analysis tools with the fib levels. So in other words, don't use fib levels on its own. Use it with EMAs, use it with VWAP, use it with Bollinger, use it with MACD, RSI, whatever your strategy is. Always integrate a strategy into something that you are already using and use it as an extra tool. Now, I found that not every single trade is going to involve Fibonacci, but a lot of them are going to help you with your entries. It's going to help you with your take profits. It's going to help you to see if the market's going to continue to dump. So there I said it. It's not a requirement for every trade, but it's a great tool to integrate into your trading toolbox. Okay, so let's go to a chart. I'm actually going to go on to a blank Bitcoin chart. I'm not going to use my chart because that's full of lines and all kinds of things. Let us use, let's see what we've got here. Okay, we've got BTC USD. Let's use BTC USDT. Okay, these are from my video today. So by the way, if you don't know, check out my YouTube channel. I do a lot of TA, a lot of stuff in there. So
drop your link there, Shawn. Drop your YouTube link there if you can.
I'll drop the YouTube link. So I actually did a video today on the dollar index, the S&P 500 and BTC and what the correlation is. I think Royal asked the question. I thought, that's a nice thing to do a video on because not everybody knows about it. Okay, so onto the BTC chart.
Looking good, man. That YouTube is looking really good.
Awesome. So you get your Fibonacci tool you get your little cross here, and you get your retracement tools. So it's the very first one on the list over here. So generally, what you would do is you'd go click on there, and you'd pull it from the start of a very, very big move, like from there, and you'd pull it to the top there. Okay, so now this is not what the Fibonacci looks like when you start out. So I'm going to just go and apply default. That is what your fib is going to look like if you pull it on the chart and you've never ever actually gone and edited anything. Very, very important. This is one of the next points. Always take your fib retracement pulls from left to right. Never from right to left. Never, never, never. Okay. So you pull from the start of the impulsive move to the swing low or to the swing high. Okay. So if I'm pulling from the swing low, from the start of the impulsive move to the swing high. And that's what I'm doing here. You can see here, this is quite an impulsive move up here. So I'm pulling from the wicks. Okay, I've been taught to pull from the wicks, not from the candle bodies. Pull from wick to wick. So start of the impulsive move, okay, and to the swing high. Right. So now this all looks very, very confusing. So what I go and do, I go and select the chart or the fib tool. You click on settings, and we can go and remove a lot of these things. So the basic, I'm going to remove the 4.2, 2.6. I'm going to remove the 1, remove the 3.6, the 1.6. Okay, those I can actually leave in there. You can remove the trend line, and I normally remove the background so that it looks a little bit neater. So I like to leave the prices in. So there you can see what the prices are at the levels, and you can choose where you want your labels to be. I normally place them on the right because you can then see them and there's no candles actually hiding them. So I've gone and created a couple of templates because swapping between these templates is actually very, very nice. So what I'm going to do, I'm going to just right click on there and apply my standard template. So here you can see there's my fib golden pocket, and that's the 0.618 and the 0.66. So to get that, what you do is you click on there. So the chart is standard, has a 0.618. I've gone and just taken one of the values there, and I don't even know what that value was, and I went and changed it to 0.66. Now a lot of guys use 0.65, but the guy that I follow with this technique, Daniel from Chart Champions, he uses the 0.66 because he's found actually in crypto and a lot of stocks that the 0.66 is a lot more accurate than the 0.65. So I've gone to change my golden pocket ratio to a green for the 0.618 and an orange for the 0.66. Okay, so that's my standard template there. So that's how you pull your standard. So if I go and I want to make the chart a little bit cleaner, I can change my template to just a golden pocket, and I can see just where the golden pocket is. So pulling from the swing low to the swing high there you can see that's a possible reversal area here. Now, all of these golden pockets will actually act as support and resistance. So let me turn the standard back on there. Yeah, you can see the 382, that was acting as support very, very nicely there in this little move. Coming down there to the 0.5, that acted as support, and we actually wicked below it and went up. So going up, that 0.236 is going to act as resistance. And there you can see resistance, resistance, and it's kind of been acting as resistance there. And I'm going to show you on the larger time frames how these things, they are mind-blowingly accurate, mind-blowingly accurate. So let's go onto the. So that would be if I want to find support going up. I'll pull it from the low of the wick or the low to the high. Okay, so there's my tool. I want to check out where support is from the low, from the very parabolic move to the top, and that will show me where the supports are. Okay, if I want to see where resistances are, I do the opposite. I pull from the start of the big move, from the top, from the high to the swing low. So I'm pulling from the high there to the swing low. And there you can see exactly where my areas of support are. Okay, you can see 0.236 active support right there. That 382 acted as resistance there. 0.5 resistance there and resistance there. Yes.
Can I ask, why are you using the 30-minute time frame? Is that just a preference for right now, or is that your kind of intraday style? Is it where that you're seeing the trend currently?
I use many time frames, but when I first look at a chart, I first look at it on a 30-minute time frame. And also because the TPO, this uses, each of these represent a 30-minute time frame. And also on the order flow, traditionally the guys that created it, that worked on the CME, that created the strategy, they suggest that the 30-minute is the best time frame to use the order flow on. So I've adopted that within my normal charts to start out on a 30-minute time frame. Yeah. So, but I swap between different time frames, and you'll see when I go to the larger time frames to see the larger moves that I'll swap to maybe like a 4 hour. For instance, here we can see we've got clearly a kind of a range that we're trading in here for Bitcoin at the moment. So, and I always say trade the ranges until they break. Very, very interesting about this $21,000 area. Let me just delete that. If I pull a fib, okay, so obviously before this point in time here, we didn't have all of this data to go by. So if I pull a fib from that high, okay, very parabolic move to this low, look at where our golden pocket is sitting, right there. So that's a major resistance. So using this, if I go onto my BTC USD chart, where all my levels are, and let's go to a 4 hour. Where am I? Where did I pull it from? No, not there. My bad. I'm actually not zoomed out enough. And I go and pull that same fib. Okay, I've actually got to pull it lower. It's not giving me the exact lows there. Let's pull it all the way to the exact low. Here we go. There's our fib golden pocket reversal area. And look at this. It's also right in confluence with a weekly level and a weekly naked POC. So that would have been an absolutely amazing trade. So if you had seen price go down to this point and you took a long there, that could have been a very, very nice take profit for you and a possible reversal area for you to then enter short to go down. Short.
I mean, there's a reason they call it the golden pocket. It's because that's where the best profits are. We've got some awesome questions.
Chad's saying it's too many lines.
Nice.
So Chad, this is why I go and make templates. So here's just my golden pocket. Okay. So I know the levels in here are a lot, but I like to trade with them. There's my lines off without my level. So when you're drawing your golden pockets, draw them without your horizontal levels. Then go turn on your horizontal levels to see if there's confluence. Like for instance, this fib pull over here. That was pulled from this low right here, from the beginning of this move at 19,258 to the top of this move there. And I could see, okay, there's a potential reversal area here. And very interestingly, right up to 21,000, came down to the golden pocket, went back up to 21,000. Then I go and turn on my levels and I see, okay, aha, that's interesting. I have a monthly level right here. And incidentally, where you've got a monthly level and a golden pocket and you have a reaction in the right reaction, you take the trade. This is like almost like magic. Doesn't mean that this level is going to hold every single time. What do you have to do? You have to come and see what the reaction is here. If I come here and I got a wick here with a candle body below the previous candle closes, you know you've got a swing failure pattern. Then what you're going to do you want to look for a change in market structure, because then you know these guys here that have shorted at the bottom are trapped, and there's a likely move to the top. And you've got the confluence of a monthly, and you've got the confluence of your golden pocket there. Hope that makes sense. Okay, so let's move on to...
Very, very cool. Can we do some AMA questions quickly? It's a nice midway.
Sure. Shout them out.
All right, so we've got a nice one from Angel, quite simple. What's the best 2 indicators along with Fibonacci and Tradingview best for beginner traders?
So a lot of beginner traders start out with MACD and RSI. So let's see, perhaps I'd say stochastic. And maybe an RSI, relative strength, possibly even a MACD. Yeah, you could see where the pivots are. Like for instance over here, the price has come down on the 4 hour. Let's actually change to a 1 hour time frame. Price has come down, almost touched that Fibonacci, and we've actually had a very nice pivot here. That means that price is actually it's oversold, and there's as soon as you got the pivot, that's possibly a good way to look at it. So yeah, you've got to find really what complements your style of trading. So I traded with RSIs, MACDs, and so on, and I've changed my style of trading to not use those. But there's many strategies. The other thing that I would suggest is find ways to mark your horizontal levels. Like I've got the daily levels, the weekly levels. Those levels are very well respected.
This question actually relates. It's from Melody. She asks, do trend lines work well with Fibonacci pockets?
100%. That's so one of the major things that I use in my trading is horizontal levels, and I actually use a lot of chart patterns as well. So chart patterns can be, okay, yes, for instance, if I change to a daily, this little parallel channel has been respected very nicely. So for instance, if I wasn't using Fibonacci, I would look for 2 or 3 areas of confluence. So that means, okay, price has now come to the weekly NPOC. It's come to the top of the channel. Has it hit one of my horizontal levels? Yes, it has. There's my weekly level. Okay, so that's 3 reasons to enter a trade. The 4th one would have been that Fibonacci golden pocket. So if I draw it again from that area here, from 22,800 to the low, boom, 4 areas of confluence. That would have been a good trade.
All right, just a little interjection here. We've got a nice question from Tony. It doesn't relate directly, but it is relevant to all of us. Tony asks, when Mask was listed on Bybit Spot this morning, there was a huge difference in price between the spot and the derivatives. And why is that so? So from my end, I can tell you the reason this happens is because our funding rate is only every 8 hours or so. And I think on that coin, it should be either 8 or 12. And basically, that is the mechanism that is used to anchor. And Shawn, if you have any info on this, please do add to it. But basically, that's the mechanism used to anchor to the spot price. And if things go crazy and the order book goes nuts within those 8 hours, it can veer away from the spot price. And that's just because it's literally 2 different pairs. The derivatives pair is a different pair to the spot. It's a different order book, and they can actually, differ in price. And then it will take the actual funding rate when it hits to bring it back. So yeah, very interesting stuff to actually start noticing. Well done, Tony. I hope that helps a bit.
100%. So Jordan and I had a conversation a couple of weeks ago. I think what was it, CTC, Jordan? I was in a trade, and I'd taken 2 or 3 trades, and every single time I'd closed it out in a small profit. But every time I looked at my P&L, I was like, man, I've got negative P&L. What's going on here? And eventually I figured it out that I think I was shorting, and the funding rate was positive, but it was 3%. 3% positive funding rate, and I got caught in the short trade with that positive funding rate, and I got clubbed 3% of my trade. So that's why it went negative. So if I had been in a long trade and the funding rate had hit at 3%, I would have made 3% just by being in the trade, not even closing the trade out.
Also
Okay.
a reason to be hedging, so you're picking up those fees on both sides when you need to be. All right, just one more question here before we continue from Anthony. Good. When using the Fibonacci tool, can I draw multiple Fibonacci lines for intraday swings and use it simultaneously with the bigger trend Fib tool?
Yes, I'm going to get to that. So you can actually draw from different levels. So now I would encourage you, if you're using the Fibonacci tool, use different time frames. So for instance, let me just turn off these patterns here. Okay, let me go back to this chart there. I'll close that, close that. So what I would say, let's go on to a 30-minute. I would draw fibs from different levels. Let's see where price is likely to go up to and retrace. I'm going to draw from left to right, from top to bottom, to see where my resistances are going to be. Change the template to the standard so I can see all of the fibs. Right, I'm going to keep that fib there. Let's change to a 4-hour. I'm going to draw a fib from this high to exactly the same low. Okay, right there to there. Now what I'm going to do, I'm going to look for levels that line up, and you can see there aren't any levels
I basically
here
call them
that line up.
Clusters. A little bit of a different wording, but for me, my strategy would be a cluster. And someone from the group actually showed me would be to do a cluster from obviously the full trend, so swing low to swing high, but then also the mid trend. You find a mid swing high to swing low, so like a mid impulse, and you do a cluster between those. And that was quite interesting.
100%. So look at this one. This is actually quite interesting. So we've got 3 levels. We've got that 0.5, a 0.382, and a 0.5 there from 3 different points that I drew. Those 3 line up, and it's very interesting that this, so let's mark it out there. I'm going to mark that kind of in between the 3. I'm going to right click on my array, my template. I'm going to say that I actually, Fib confluence. Okay, so now let's switch off our Fib retracement confluences. So 20,433, those from all those 3 fibs that I drew, those were the 3 that lined up together. That is a major resistance. If I go back to my chart here, let's see if that lines up with any of my horizontal levels, and look at that. We've got right there at 20,541 a weekly level. And look here where price has been rejecting at. 2380, go back to that chart. Look at this, 2433. How close is that? So you're going to know that is a major resistance. If we break out of that major resistance area, then obviously we could see higher prices. So it's a very important level to watch. Okay, so as I mentioned, support, you pull from the low on the left-hand side to the high on the right, and you will find support on the way up. For resistance, pull from the high on the left to the low on the right, and you'll find resistance on the way down. So often on alts, you'll get a pump to the 0.618 and a secondary pump after that. So what will happen, we'll actually even try and draw it on Bitcoin over here. So let's see if we can find one here. I'm going to go to a 4-hour. It's not always the case. I mean, Bitcoin has kind of been ranging very much, and so basically, let's say for instance, I can't find a place on the chart now. So basically what would happen is, let's say, for instance, you pull your fib, price would come down and touch the fib, that golden pocket, and if it acted as support, often you'd get a secondary pump. So obviously we've been a lot more bearish over the last couple of weeks than bullish. So this would work in a bullish sense more than in a bearish sense. Okay, let's continue there. So each of the fib levels can act as support or resistance if there is confluence. Very, very important. So I've already shown you that on certain trends, that there's definitely a case for support and resistance at each of the fib levels. And this is the one that I found, these two things. This is what I found the most interesting. And I'm going to show you some things on the highs that we made last year in November using these methods. So in a strong uptrend on the macro time frame, the 382 fib level is generally not lost as support. If it is lost, expect a retracement to the 618. Losing the 618 is a possible early indication that the uptrend is over or extended consolidation is coming. Okay, so this is what it means. So going on to the daily time frame, we're going to look at the larger moves. In fact, let's go to a weekly, because I'll show you what I mean here. Okay, so remember what the principle is. In a strong uptrend on the macro time frame, the 382 is generally not lost as support. If you lose the 382, you're generally going to go to the 618. So let's take this. Here you can see, I'm going to take it from this move in January 2021. There you can see that's the start of the very, very strong up move. I'm going to draw that out to the top of that right there. So let me increase the size of that screen so you can see better. So in a strong uptrend, the 382 right there is generally not lost as support. If it's lost as support, you're going to have a retracement to the 618. So here you can see we went right up to the top. 236 acted as support for a couple of times there. We lost the 236 as support. And actually we came to the 382 and we went to the 0.5. So this, for me, breaking that 382 was an early indication that the trend was possibly over. Look at this. 2 weeks after that, we broke it majorly back to the downside, right all the way back to 29,000. Okay, let's take another example. That big move, let's remove that one. The big move to 68,000. We had those couple of months, about 2 months, that we consolidated in that $30,000 area. So watch when I draw from the beginning of the move, right at 29,000, all the way to 68,000. So remember what the principle is. The 386 is generally not lost as support if the move is still going to continue. Look what happened here. Went up, and here the 382 acted as support. Right there. Acted as support there. We went up, made highs, and look at this. We tested it once on the weekly time frame, and then we went right through it. As soon as that happened, you know that the 618 is incoming. And what was the second part of that? I said that if it is lost, expect a retracement to the 618. Losing the 618 is a possible early indication that the uptrend is over or extended consolidation is coming. Look what happened here. We lost that 618. Faked out above the 618 again, just to get guys long FOMO in, and we crashed down dramatically from there. Very, very interesting. So that's a very, very good indicator. So once the bull market is in place, you can use this tool to see, okay, I've got to take profit on my longs, and I need to start looking to hold a swing short to possibly the bottom. Okay, let's close that out. So this point over here, this is very, very interesting, because this shows me that we are actually possibly in an area of strength at the moment. After a strong downtrend, you can only start to have confidence that a potential bottom is in once the 236 fib level has been claimed. Okay. So now I'm going to draw from the top to the bottom of the move. I'm going to draw. So let's say, for instance, we were now in January 2022. Okay. We had this huge move from 68,000. Sorry, let me select that. From 68,000, 69,000, all the way down to 32,000. Okay. So let me reread that for you. After a strong downtrend, you can only start to have confidence that a potential bottom is in once the 236 has been reclaimed. Very strong move to the downside. Where's the 236? 236 is right there. And notice along the way, this 382 acted as support for a couple of weeks. Then the 0.5 acted as resistance for a couple of weeks. There was a nice range to trade there. Would have been nice to see what those levels of confluence were with the horizontals and chart patterns, trend lines, and so on. But let me just remove those. And look what happens here. The 236 acted as support for 2 weeks. So we weren't sure if the bear trend was over. And look what happened here. Straight through. And there was an indicator that trend was going to continue on a downward spiral. You can see here that 236 was tested a couple of times of resistance, came up. We never ever reclaimed the 382 on the weekly, and we lost that 236 again. So that was an indicator at 42,000, and a lot of guys were calling at the time when Bitcoin was at 50,000. We'll never ever see Bitcoin below $40,000 again. We'll never ever see Bitcoin below so-and-so dollars again. And this was an early indicator, a leading indicator to show you what was actually going to be happening. So I want to point out something very interesting with what is happening right now on the charts. And it's
There's
quite
three
exciting.
more questions I'd like to fire
Go
at
for
you,
it,
because one of them is about the charts. But let's get there. So first of all, from Donadras, can Fibonacci indicator work out when used during a volatile trade movement?
Yes, you can. Like for instance, yesterday, I would have loved to have traded that volatility. I just couldn't be. I couldn't be at the charts. So what I've been doing. Yeah, you can see I've created. Where's my Fibs? Okay, let me turn off these levels. And I've gone and created a lot of my fib levels here so that I can turn them on all at once. There's a whole bunch. And you can see how well those fibs have been respected, reversal areas all over the place. So if I could sit in front of the charts and be fully immersed in the charts, and you have your fib levels drawn out beforehand, you have your levels that correspond with those. For instance, that one would have been a good one there. Yesterday, for instance. Okay, let's go and isolate it. Yesterday, the FOMC meeting, there's my fib, there's my daily level, got close to it. If I was quick enough, I could have taken the short and made a really, really good profit. Taken profit all the way down close to this fib or at that fib over there. Yeah, so it is possible, but you've got to be really fast.
Yeah, I do agree. I do agree that it actually works out very nice. It can help you rein in the volatility. It can help you look for your max take profit, look to your golden pockets for your max take profit if you're on the train, or if you're looking for a reversal. As we can see from Shawn's charts, every single real reversal comes at a significant Fibonacci level. And if you're not seeing them, you're not finding them, and that just takes a little bit of learning. Okay,
Absolutely.
So the next one. What is the main disadvantage of the Fibonacci method? This is from Otaku.
Well, I guess, you can get so wrapped up in it that you don't see other things. So the disadvantage is if you use it on its own and you don't see the other confluence. Like I can sit and draw fibs all day long, but if I don't take the trade and I don't see the trade, that can be a real disadvantage. So a lot of guys can draw lines on charts. They can draw trend lines on charts. They can see MACDs and so on. But finding that area of confluence where you actually take the trade and yeah, that's always the thing. I think that's with any indicator, not just with Fibonacci.
Awesome. Yeah, there is a little screenshot I want to drop on the group just now, just with all of my confluence for the indicators for my short yesterday. There were 5 indicators. You saw it, Shawn. It's like sometimes everything just lines up. It was
Incredible.
MACD, it was MFI, it was stochastic, it was RSI, and there was a bearish engulfing reversal candle pattern, and it was just like an easy 50%.
And it's so nice when those things line up like that, because they don't always line up like that.
No. You wait and you wait and you wait. And then when they do, it's like, okay, a little bit of capital, boom, 50% in 25 minutes, easy. Okay, so the last one, this is getting down to the gritty. This is from Chad.
Yeah.
Jordan Crypt SA, you said that in this year, BTC may go towards 12K from 18K, but now it is at 20K. Can it go down from 20? So I didn't exactly think it would go directly down from 18. I do think there's a lot of bullish opportunity, but look at the bigger bear trend. That is what I'm looking at. The bigger bear trend can
100%.
easily take us down to 16, down to 14. So my answer to that question was, yes, maybe you misunderstood me. I do think we can pump to 24K. We can pump to even 26K, but that bigger bearish sentiment, that bigger bearish trend is at the end of the day, in my opinion, going to pull us down. This is not financial advice, but I am looking to the 16K level next. And yeah, we'll see what happens if we break that. But Shawn, if you want to go into some TA on basically, the bigger trend and what you see happening, that would be awesome.
Yes. So using the fibs, this is quite interesting, and I'll answer that question. Is Bitcoin going to go lower than $18,000? Yes, the answer. Using this 236. So I'm going to read it again. After a strong downtrend, you can only start to have confidence that a potential bottom is in once the 236 fib has been claimed. Okay. So I'm going to actually do this on my normal chart. Let me turn off these levels there, switch off that fib retracement. I normally leave these value areas in and the PFCs in because it's something that I trade with on a regular basis. So, okay, drawing my fib. So let's take it from 22,000, the swing high, to the swing low at the moment. And I'm going to use my template of the 236. Okay, look where that 236 is. Okay, so on a smaller time frame, obviously we've got to zoom out. This area, that 19,157, confluence with the range POC. And let's turn on my levels. Okay, there's a weekly level right around there. There's a daily level right around there. So that's a huge level. That has to hold for this little trend to continue. Okay. If we see that this 236, we come down, we test it, and it's lost, then I think we got problems. Then I think we could definitely see 15,000 and lower. 17,000 is below 18. The next level down is 16 or 15. The next level down, I think, is about 12, then 10. Let's hope we don't go there. So that's one thing. Let's draw the opposite. Okay. Remember, if we hold the 386, not the 386, I'm thinking computers. If I draw from this low here to that high there, and I'm going to change it to my 382, not a 386. You can see here, we're literally just holding that 382 level. So in essence, we've got to hold this 382. We've got to hold there where the 236 was. Very, very important. If we go down from this 382, excuse the screaming in the background. I've got 3 boys.
I was stressed.
It sounds like they're climbing into it. I think they're disagreeing about fib levels and trading and stuff. So, okay, so this is also very interesting to me. If we draw a fib from, let's draw it first from that $30,000 level. From the top there, all the way to the bottom, and I'll change it to a 237. Okay, in fact, let's do it on this chart. Apologies, because that chart's a little bit busy. So I'll draw it from 24,000 first. Okay, there again, right at that $19,800 level, that's where that 236 is sitting. If I draw it from higher up, let's take it from that $32,000 area. We still have to reclaim 21,000. Okay. If I draw it from the high here at 46,000, and this is what I find very, very interesting. Right there, we've still got to reclaim that $25,000 area. It's my youngest guy coming in and he's pushing stuff in here. Apologies if the noise is coming through. So we've got to reclaim that $25,000 area, and look where it is. It's that range, current range top. Again, if we draw from the top at 68,000, 69,000 to the bottom, look where it's coming in, 30,000. So for me, I'm not going to have a major bullish bias until these 236s have been reclaimed. So the levels there, 19,600, we're above that. Okay, we need to reclaim 21,000. We need to reclaim 25,000. We need to reclaim 30,000. Once we reclaim 30,000, I think we're going to see real moves in the price, possibly past the all-time highs. So, but watch for those levels. If those levels get broken, I think we're definitely going to see lower. Okay. So, I've already discussed look for Fibonacci confluence by taking different pulls from different levels. If there's an area with several fibs lining up, this creates a stronger level of support. And the last point on my list is that fibs can also be a great place to take profits. So if I've taken a trade, and let's say I've gone, okay, let's change to 15 minutes. Let's say I've gone long, and let's say I've gone long at this point here. Let's say I got in at 20,800. I can see where take profits are if I pull it from the high to the low, because that will make me see, or it will show me where the resistance points are. So high to the low, and a potential take profit would be there at the golden pocket. And if I turn on my standard points, these could be take profit 1, take profit 2, 3, and possibly even 4. Okay, hope that makes sense. Do you want to take more questions, or what would you like to do at this point, Jordan?
I think that's awesome. Yeah, so we have 9 minutes left. You're welcome to do whatever you like, or we'll look at some news. But, I mean, the group is booming. I mean, wow, James, Pedro, Wong, McCall, Christian, SK, Warren, Gabriel, Carpe, Jess, JD, Crypto, Ocean, Chris, Landerlof, Tony, Chad, Blessed. Oh, you're all noticed and appreciated. Christian, Gandalf, Angel, Marion, NDPW, Anthony, Donadras, Dripson, and Crypto Cloud. Thank you, everybody. It's your last chance. Any questions for Shawn? Otherwise, Shawn, if there's any alts you'd like to look at, anything you've been screening, otherwise, you're also welcome to hand it over to me, or we'll wrap up. It's been an awesome session. I think we've all been concentrating very hard. So thank you, everybody. Much appreciated. Up to you, Shawn.
Well, one alt that I've been looking at and that I've been following quite closely is Chili's. The price movement on it has been absolutely insane. And I saw somebody in the group had taken a short from, like, I think it was like 16 cents or something like that. Massive, massive trade. Yeah,
It's a nice coin. For those of you who don't know, Chiliz is involved in the transition in the sports industry into kind of like sports fi. And they are, I mean, they've been around for a while and they're relentless. Their sponsors are, you know, some of the biggest names in the basketball industry. They're working with Facebook. Yeah, I really like the coin. I also really like trading it. It is high volatility, so do watch out. But
be careful.
it's a fun coin to trade. It really is. And it has
It really
strong potential, strong use cases, all of that.
Absolutely. The amount of entries that I've missed with this coin over the last couple of days is absolutely scary because it hits a level and it goes. It just goes. It's absolutely insane. And as you said, some of the moves have been absolutely incredible. I mean, look at this. This was the 2nd of November. Let's see how much percent it moved. 12% within a time period of an hour and a half. That's incredible. That's absolutely incredible. I mean, imagine getting in on a move here and going all the way to there and taking profit. So, but for me, it's been trading in an upsloping parallel channel. So quite often consolidation moving upwards like this, although we've got market structure that's higher lows, higher highs, higher lows, higher highs is bullish. You've got to be careful because this kind of consolidation could mean that there's a bearish leg coming. So why that is because people FOMO in long, and if there's a market structure change to the downside, those longs are going to close out and they're going to re-enter as shorts, and we could see some big moves down. But my levels over here for Chiliz, I was actually looking. You can see I made some notes early on today, and I just wasn't at the charts when this happened. I actually had a fib that I pulled. Yeah, I pulled fib from the high to that swing low, and you can see there was a fib level there, and I was actually hoping that the price would come up to that fib level or to the top of the channel there, and I would see possibly bearish CVD, and I would short on a reaction. Let me quickly introduce you to my one boy. This is the guy making all the noise. This is Caleb.
Future trader right there.
Anyway, so I think I'll hand over to you now, Jordan.
All right, cool. Yeah, so we've got one more question just to chat about. It's from McCall. He says, is it weird to think that alts generally love the 0.716 fib level for a deep retracement?
Yeah, that's you can definitely look at that 0.77. Yeah, I can't even remember 718. I think it is. Let me just turn on the standard. Very, very possible. I mean, look at this over here. It's possible we could get retracements to that 0786. So look out for those levels. Obviously, they're going to act as support. On the opposite end of the spectrum, it's going to act as resistance as well. Definitely. These levels at the moment they're being crazily respected in Bitcoin and a lot of the alts as well. So it's quite nice to know.
All right, so I think we'll wrap it up there. It's been an awesome session. Wow, sure, 33. So just let us know. I mean, there are a lot of peeps here, 33 people. Let us know. We actually have 4 more minutes. If there's another altcoin you'd like to see, or we'll wrap it up. Let's see. Royal asked the question. I won't be able to give bonuses to everyone today. We've taken so many questions. I'll be able to give 5. But a nice question here from Royal. What's the best way to find the market retracement using the fibs? And I mean, that's a very simple way to put it. And I think the whole session does relate to that. But it is a nice question. So maybe go back and have a look through the session. But let's just see here. Avalanche, Band, Sushi. If there are any that we can vote on, we've got 3 more minutes. Have a look at SHIB, maybe. Chad says that SHIB is booming. It's not usually a coin that I trade myself, but it'll be interesting to see if there's high volatility.
Yeah, this thing on the weekly is right at support. So, if Bitcoin breaks out from where it is at the moment, then yeah, you've probably bought a very nice level there. So let's see what we have there. We've got a weekly there, possibly rejecting at the weekly there. We have a weekly there. Let's go to the monthly. Okay, and we've got a monthly level right here as well. So that is a major support level. That monthly there. It could well be, not financial advice, could well be that if the bottom is in for Bitcoin and we hold those 236s, this could be a decent coin to buy on spot. You never know. Spot isn't like the derivatives market. You don't get liquidated. You just got to hold it out. Long-term buyers, if you buy at the bottom, sell at the top. That's the way to do it. Don't buy at the top and sell at the bottom and lose money like most newbies do and like most of us did.
All right, I think that's beautiful. Let's wrap it up there. Thank you so much, Shawn. Thank you so much, everybody, for being here. Please do join us again on Monday. And remember, next week we'll be in Global. We'll be having some more of Crypto Sculpt Masters teaching in Global. So please invite your friends, be there. And remember, tomorrow and Saturday, we're doing our ROI snapshot competition. That's cumulative P&L. I'll be announcing that shortly. You'll see all the rules, and most of us do know the rules. So get involved. Let's see. It's heavy competition in this group. As we all know, a lot of us are doing really well. So congrats to those. And wow, thank you again, everybody, for being here. Look at that. We just hit 35 participants, which is the highest we've hit in a while. So thanks, everybody, for being here. Sorry for the latecomers that we are about to hop off. But Monday we'll be back again. Sunday we've got our educational session. Shawn, if there are any last words you'd like to give, please go ahead.
Yeah, sure. Looking at this SHIB, it definitely is moving. A 55% move. So maybe this is a coin to look at, but very, very volatile. So I think coins like SHIB and Doge, because Elon Musk has bought out Twitter, have become very, very bullish. So I think be careful shorting these coins if you're looking to short them. Guys, thanks for watching. Thanks for listening as always. And I wish you safe trading and look for confluence. Have a great one.
Thank you, Shawn. That's awesome. And Gibson is preempting. Always play from a position of power and strength. Use the stop loss and don't get wrecked. Thank you, everybody. Have a wonderful evening further. We'll see you in the group. Thanks again, Shawn. Good night.
Hey, guys. Thanks, Jordan. Appreciate it, man.